Yes, hello guys, how are you? Hope you are okay. Welcome to another video. Hope you are okay. Welcome to another video. Hope you are fine, guys. How is your trading going on? So it has been a while since we posted a video here. So yeah, I want to show you how this week went with EUR, USD, the euro, and the US dollar. So let's go straight away into the charts for EUR USD. So as you can see here, we are on trading view. So first of all, we are going to first go to the weekly and see. Let's go to the weekly time frame. So we're going to do top down analysis. We are going to move from the weekly then to the H1, where we are going to take our entries from. So let us start with the weekly. As you see, EURUSD, as we have been in an uptrend. As you see here, it has been in an uptrend. It has been in an uptrend, but this week, as you see, we have been in an uptrend also. So as you can see this candle here, as you see this candle here, this red candle here, you can see this red candle here. Then after this red candle closing, this one, then this week we moved up. It has been in an uptrend, so I'm going to get my horizontal line and mark it here on the open. For me, I always mark the open of the week. So after marking the open, so that is the open of this week. As you can see, we are on the weekly time frame. So after that, from the weekly, because we have seen that we've been in an uptrend on the weekly, because you can see here, EUR has been breaking, moving up, breaking all the higher highs up to there. You can see here it also broke here up. Now it has been somehow retesting. It has been somehow retesting the demand zones and taking out liquidity one way or the other. So let us go down. Let's go down to the daily time frame and see. So on the daily, sorry guys, yeah, let's go down the daily. Let's see. Daily is here. Sorry guys. So we have moved down to the daily. Remember, we have marked, this is the line that we marked, this yellow line. Mark this yellow line here. Mark this yellow line here, you see. Moving from here out to this side, this yellow line here that you can see. That's the line that we have marked, showing us our open of the previous, of this week, the closing of last week and the opening of this week. So after that marking there, So we can extend our line here, also here at the open of Tuesday here. I think this is Tuesday, because if you count this candles 1 2 3 4 5, yeah, that is Tuesday. That's when the market started to what, going up. So after that, you can see this red candle here down. As you see this red candle here down, this red candle in between this blue, the red, then this blue, like this blue candle. So this red candle here, you see here, in between this and this. So this is the low of this candle. It was swept on Monday. Sorry. This low here of this red candle, it was swept on Monday. Then after sweeping this liquidity here on this red candle, that was a confirmation that we are going to be moving up throughout this week. That was a clear confirmation. So after that, you wait for this candle to close, as I'm going to show you. The same thing you do here on the daily time frame, it's the same thing that you're going to do on the lower time frames, or the entry time frames, is what you are also supposed to do. After the candle is sweeping liquidity, you wait for it to close, then you enter. When it breaks, when the next candle breaks the highs of the previous candle that has swept liquidity, don't enter before the candle. For example, don't enter before, like this candle here that I've shown you, it came, sorry, example like this candle here that I've shown you, this red candle, it was swept here. Let me bring this candle here, this candle here, the red candle was swept. This candle was swept here. Liquidity was swept. Guys, consider liquidity sweep. If you understand what we call liquidity sweep, I guarantee you, okay, not every time that it's going to work, but out of 20 trades, you are going to win like 15 or 18, and you lose the 3. If you master this liquidity sweep, I'm going to show you, whenever liquidity was swept, the market moved in the same direction, which assures you that, or which shows you that liquidity sweep is important. Even if you go on the daily, or you go to the H1 or to the M1, whenever I say liquidity sweep, the market moved in the same. If liquidity is swept during a downtrend, you will see the market will continue moving to the downtrend. If it is in an uptrend, the market continues to move in an uptrend. So like here, we swept liquidity. As I told you, we swept liquidity here. This is the red candle. So liquidity was swept by this blue candle here, or the buy candle. Here you see this week here down, swept liquidity of this red candle that is in the middle. Hope you understand it, guys. So after that, The upside this was Tuesday, so we left Tuesday to close. It closed with it swept liquidity and it closed up, and it closed up after liquidity swept here. So we mark the open of this candle for Tuesday. No, Tuesday closed here, so Monday opened, no, Wednesday opened here. So we mark the close, because the close of the previous candle, it is the open of the next candle. That is the intersection, the intersection of this candle here. Here, where it is the this yellow line here, the horizontal line that I've marked here. This candle closed here, the next candle opened exactly at the same point there, at the yellow line. So after marking, we scale down. Let's first scale down to the H2. Scale down to the H2. So after that, scaling down to the H2, try to zoom. Yeah, hope you can see it. So you see our line is here, the open. Yes guys, you can see here the yellow line. It was the open, it was the close of Tuesday, and the open of Tuesday, and it's the open of Wednesday, this yellow line here. So the market opened here. This is the 2H. This is the 2H time frame. So after the market opening, now we are going to see, after the market opening, you see here the market has been making, higher highs. It started to making higher highs, higher highs here. Here we were in the downtrend. See, the market has been moving here down, and break it here, then it came here, it broke this level, then it came down. It has been breaking, going down. As you can see, this is a downtrend. See, it started from here, going down. There's been a downtrend. So after that, the market this week has been moving up. So we are going to see, to get the best entry, we are looking for a best entry where we are going to enter from. So you have seen that here, this was the reserve to liquidity. Then we came here, we have marked the open of the previous candle, or of the candle for Tuesday. It is the same as the open for Wednesday. So after opening, because you see here, we came here and broke structure. We broke structure here. Hope all of you know what we call break of structure. Here, and these two candles, the blue one and the red one. So I have put this line. We broke here. The market broke structure. After breaking here, it broke here. Then after breaking here, it came like here, these two red candles, you can see here. It came back down a little bit, but it didn't have like that so much momentum in going down, which means that the buyers are strong, because as you can see, these three red candles, this three blue candles, this one, and this one, they indicate us the one for Tuesday, one that has stopped liquidity. This one here, these three candles, 1 2 3. So these ones have shown us that the buyers are in control, and the buyers are in control. So after breaking, we saw sellers here trying to push the market down, but buyers were strong. Again here. Again here. We broke again. Again we broke. Again we broke structure here. After these three, the two red candles and this blue candle in between, again we broke. And after breaking, we formed a red candle here. So this is where we are going to mark. This we're going to bring our box here. And we mark. Let me first move this yellow line here. So we are going to mark our box. Just we are going to mark the body. This kind of small. Let us mark it all of it. But sometimes I do. Okay, I can mark the wicks, the high of it and the low of it. But here, as a picture is not somehow too big, let me mark it all. So remember, we have broken. We first broke here, then again we came here and we broke. Then when we after breaking, you remember we first came here, we saw that buyers, from the day we have seen that buyers have stopped liquidity. Now we are moving up. This period candles showed us that buyers are in control. So after that, sellers came here. These two red candles tried to push down, but again we broke here. Then just after we have broke this level, these two red candles, we broke structure again. Then just after breaking, we formed this candle here, from the demand zone here, this red candle you see here inside our box. Okay guys, so yeah, we came here and broke. So after breaking, I was showing you that after breaking here, we created a red candle here in between a demand zone. So this demand zone is what we want. That is what we want here. This demand zone, we need liquidity to be swept here, just right away with this demand zone. That's where we want liquidity to be swept, so that we do what? We enter into a buy position. So after that, you remember have marked a box. So then we come, bring our horizontal line just below that box. You see it? Okay, let me first, this box is going to confuse us. Let us use this yellow line here. So this is our candle, if you remember. So then we are going to wait for price to come back here. Then we formed these three candles. They pull back. Just wait for price to pull and come back within to come back and sweep our liquidity here that we've marked. Now as you see here, you had this red candle, 1 2 3. Then after the 3 candles, the fourth candle was a bullish candle and it swept liquidity, as you can see here below. It swept liquidity here below this candle, this red candle, or below our demand zone. It came here and it swept liquidity and it closed above. Swept liquidity and it closed above this yellow line. Didn't close below here. It closed above our yellow line and it swept liquidity. Both this candle here and this demand in our demand zone here, it was also swept. Liquidity swept here and here. That's where we enter. Then now there we prepare for our entries. So after seeing this, bullish candle closing up or moving out away from our zone, it has swept liquidity because that's what we want. After that, now we get ready and wait for our, because this candle has closed, then we come and mark the high of this candle that has swept liquidity. We marked its high. Now we are looking for entries. We mark its high. This is the high where I've put my yellow line here. This is the high of this candle that has remember, this is the candle that has swept our liquidity that we wanted. This candle, remember this candle, blue candle here, is the one that has swept liquidity, this one. So we mark the high of it. That is the high where there's the yellow line. That's going to be our entry. This high is going to be our entry. After this next candle breaks the high, that's where we enter from, and we put our stop loss here on the low of this candle that has what? I will put the stop loss here. Always put stop loss here on this candle that has swept liquidity of the demand zone here, of our red candle here that has swept liquidity of this candle. But it has swept liquidity from this candle and this candle. So put our stop loss here below and entry above it. This candle here that has swept liquidity, it's where we put our entry on the high and stop loss on its low. So then after here, we come here, pull out our up or long position. So put our entry here, our entry, here. Then let's first, for me I always target a 1-to-1. I'll make a video and show you. Oh sorry, let us put it again. Yeah, that is our stop loss. Stop loss and our entry. Stop loss entry here, so place there down. Let's move it this way. Entry there. Here is we have put our yellow line. Come here and target a 1-to-1. You see our target was hit. I'll stop loss down here. Yes, I hope now it is clear, you can see it. We put our stop loss. Put our stop loss here down in this candle as a soft liquidity, and the entry here. So the moment it breaks, that's where we entered from, and we targeted a 1-to-1. Even it went higher and higher, but that's where we are supposed to put this. For me, it is always risky 1-to-1. Risky 1-to-1, because you are not a market mover. You don't know how the market moves. You have no guarantee that the market is going to move a 1-to-3, 1-to-4. Because for me, I can enter like 5 trades using a 1-to-1. For you, you can enter 2. You can enter like 2. Well, for example, for me, I can enter like 5 trades and I win all of them. And you enter 5, and you enter 5. You enter 5 and you lose all your stop at break even. But when for me, I have won all the trades. And remember to always trade in sets and using a 1-to-1. For example, you must said you can go and try on your demo account this strategy, and you say that let me trade like 20 trades. You can set like 20 trades, and you see the results. After 20 trades, I have won how many? Have I won like 16, 17, and I failed 3. But I assure you that when you try to use this strategy and trading in sets of trades, you will see results. Don't chase trades, always risk a 1-to-1. Because market sometimes it always moves in a 1-to-1. And you gain back your money that the market has taken away from you. You can bring it back. Always don't take much. You just take a little. Because when you risk 1-to-1, you get some profit. You risk on another trade 1-to-1. Because sometimes you can risk a 1-to-2 and the market moves within a 1-to-1. I'm not saying that in 1-to-1 you will always win, but you will win more than you will lose. You try it out. If you have been risking like 1-to-2, 1-to-3, and you end at a break even, just go back in your trades that you have been trading and just try to be risking like 1-to-1. You will see that you have won all the trades that you have lost, or that you have gone out of or at break even. So learn how to risk like a 1-to-1, and in trading sets of trades, a 1-to-1, or you can say that sets of 20 trades. Then you say that they may trade 10 trades, and I see out of 10, will I get 5 when I'm risking a 1-to-1? Will I get like 7 or 8 trades and I fail only 4 or 3? So try it and see. You can see here, that was Wednesday. After sweeping liquidity, we went up. That was a trade. You can see here also there's a nice trade here. Because I don't want to make this video too long, Let me see. When we came here, we also broke. We came here again, we also broke here, and after breaking we also had another demand zone here. You see guys, we also had another demand zone here. Let me show you. We were here, entered here, remember, then there's a yellow line, we broke again, we made a higher high, then after just breaking here, we had another candle here. It is like a doji here in between, so we also had another demand zone here. Then after that, we also we put here our yellow line. You see this candle? Let me first move this yellow line so that you can see it clearly. It is here. This is like a doji here in between, because here we broke, then we formed the doji after just breaking here. So we said, after seeing it, we came here and put a yellow line. So after putting a yellow line here, its body, you know that is the body, even though it is the myth. That is the yellow line. We have put our yellow line, because it is a doji now. That's like its body that we have marked. But to be honest, yeah, we marked its body. That is the body. Sometimes I don't mark the body, but it's better you mark the body, not the wicks, not the high and the low of it. So then after that, we came here, we broke that level exactly where there's our yellow line. We broke here, you see here it broke. We had these strong buyers, this big candle and this one. Then we came back to retest this demand zone here, where our area of interest here, this doji candle. So after coming back to retest, again we swept liquidity of this red candle here and our doji candle here, the body that we have marked. You see here, this wick down here, it is below our line that we have marked. So then after that, again we come, we wait for it to close. We wait for it to close, and after it closing, we mark its high here. It's where we're going to enter from. We're going to enter from its high. Going to enter from its high. Our stop loss here at the low. Our stop at the low. Enter from the high, and then we risk a 1-to-1. Sorry. Let's put another one. Let's do it again. Enter from here. Is the entry. Risking a 1-to-1. You see guys, risking a 1-to-1 is better. Yeah, as you can see, risking a 1-to-1. You see, we put our stop loss and remove this yellow line so that you can see clearly. You see, put our stop loss just below, came here and put our stop loss just here. Came here, our stop loss just below here, this candle, and we entered here and it's high. Then a 1-to-1 was reached, then we hit our target. You see, we are risking 990. We risked 190. It's 190 to make 1000. Yeah, that's it. We risked 1-to-1. We made 1001, 1010, and we risked 990. So that is it. You repeat the same thing, you will see results. And if you use the H1, but for me mostly sometimes I enter using the 2H and the 1H. When I see liquidity sweep on the H1, sweeping and closing above, I just mark the high and the low. The low will be my stop loss and the high will be my entry, and I risk a 1-to-1, and I make money from the market like that. So that is it guys. I want to make detailed video about this. Don't forget to hit that subscribe button and the notification button, the notification bell. See you in the next video. God bless you, and like, comment and subscribe.